Hi, Larry Gaines, PowerCycleTrading.com. Well, in trading, it really comes down to direction and then managing your trading risk. And in this trade video, I want to show you an Apple trade setup and the option strategy selected that's a very defined risk, low risk strategy. So, you can see Apple, it's been down here, got hit real hard back in December and then was trying to bottom out here. And then first thing I like to do is look at the fib level. So here, looking at that prior swing high where that gap was to the low, we can get some good working levels. So the 382, then you see it started to push into this 50. So this was last week on the 30th, and here's your 50 simple moving average. So we were very interested in Apple, and then we wanted to look at a trade setup though once it started to push through this 50% retracement and started to push through the 50 simple moving average, okay, as resistance. So one of the setups to keep this very defined risk in case this thing rolled back over was to do, one strategy was to do a call debit spread with the potential to convert this or adjust it to what we call a long call condor. So here's what that trade setup looked like. So this is an alert trade setup. We've got alert service, and this was actually texted out last week, but it was doing the February, it's the monthly expiration 15 series, very tight, $2.5 widespread, 167.5, 170. We were looking at 90 cents or around there, so 98 cents this was set up. So that's the maximum risk if this was just a crater and go straight down. And you can see that today going out at the close, this was up at $1.60 or up $62 per spread. So over a 50% return just on that low capital at risk. Now if we wanted to reduce our risk, there are a lot of different things you can do with this. We could sell a 175, 177 bear call credit spread against it way up here, bring in $49 credit, and that then reduces our risk to the downside and upside to basically $49. All right, so now we've got only a risk of 49, but we've got a huge zone of profit in here between the short strikes there at 170 here, or 175 and 170. So if it was to close here next week, next Friday, this would be a $200 return or $200 per contract on $49 at risk. So fantastic positive risk ratio. Or we could go out even further and get more potential upside. We could sell the 177.5, 180, bring in about $26 credit and have even a bigger profit zone. So these are the kind of trades I love to do, and then you have a lot of different options as to how you want to reduce your risk or hedge your risk or neutralize your risk. All right, hope this helps, and I'll talk to you on my next video update. So this is also a trade part of our alert service. Let me show you what that has looked like over the past, since last May. So this was our breakout trade alert service, volatility breakouts and reversals, and started this last May 2018, and so far these are texted out to members of this service. We've had 55 closed out trades, 41 winners, 1 break even, 13 losers. So 76% winning probability. And these have been all, just based on these breakout type trade setups with very, very defined risk type option strategies and risk adjustments. So if you'd like to learn more about it, I'll be doing a free webinar tomorrow night, February the 5th. So if you'd like to join us here, you can go to our site if you don't use this email and sign up. So you can just visit our website, PowerCycleTrading.com, PowerCycleTrading.com, and you'll see this little link up here where I've got my little mouse hovering, upcoming live webinars. So just click on that. We'll always have everything listed as far as what's coming up as far as a live webinar that's free or a course that's coming up. So if you'd like to join us tomorrow night, February the 5th, 6 p.m. Eastern, just put your name, email address in here and join us tomorrow night. I'll talk to you hopefully tomorrow.